Good morning, everyone, and thank you for joining us on Morning Markets from the team at True Potential. Today, we're going to discuss asset market performance from yesterday and then look at some of the key data points that we discussed at the beginning of the year that we as a team would be looking at. Just then, looking at the equity market performance from yesterday, very much aligned with our discussion yesterday morning, quite a regional disparity between how equity markets had been performing yesterday. So just bringing that to life for you, whilst equity markets in the EMEA and across the globe were positive yesterday, we again saw a stronger performance in the US. So to put some context around that, here in the UK, we had the FTSE 100 up about 0.4%. Roll into Europe with the Euro Stoxx 50 up about 0.8% on the day. And then into the US, another good and strong performance there with the Nasdaq up 1.9% on the day and the S&P 500 some 1.4%. I think at a sector level, just looking at what's been going on, worth noting that the relative outperformance of the financial sector has waned over the past couple of days. We've touched on the results from some of the banks and the negative share price reactions that they did see. The other side of that, we've looked at some of the technology names in the technology sector in particular, and that has performed well. We discussed yesterday morning the strength of Netflix results. It had a very strong day in the market yesterday. But it wasn't just confined to the US. If we look at Asia, we look at Europe, technology and related sectors, companies posting strong results and getting a positive share price reaction. So that was supporting the strength in technology yesterday. Just then turning to currency markets, we did see sterling yesterday move through 137 to the US dollar earlier in the morning, and it did trade back to close below 137 yesterday. But a couple of factors I think are impacting just the people's view on sterling and the market's view on sterling at this point in time. So we saw strength against the dollar. We also saw a similar move against the euro, trading through 113, closing the day at about 1.126. So very close to getting through that 113 level. The inflation data that we touched on yesterday morning probably did push back people's expectations of a rate reduction coming through from the MPC in the near term. I think we also heard from Andrew Bailey yesterday, the Bank of England governor, speaking around just negative interest rates, really the amount of work that needs to be done there before that could be something that would be part of the Bank of England's toolkit. Not to say that it won't be, but there does appear to be a number of hurdles to that at this point in time. I think the other thing that we touched on at the beginning of the year that we'd look at would be the rollout of vaccinations for COVID-19. And clearly what we have seen in the UK in terms of a developed market context, it's leading the way in terms of the number of people that are receiving the vaccine. Some 4 million people, looking back at yesterday's data, have already been vaccinated with the first dose. I think where does that leave us? It leaves us at sort of a rate of around 7.5 per 100. With the exception of the likes of Israel, Bahrain and the United Arab Emirates, that puts the UK at the top of that global vaccination rollout programme. That's important because it may allow the economy to reopen swifter than maybe people are expecting as people regain confidence. And to that, I just wanted to mention the dynamics that we're seeing in Israel. I know it's a small country with different dynamics, but it is certainly leading the way in terms of the vaccination rollout. And that will give us some indication as to how economies and activity recover, particularly within the services side, as a large proportion of the population receive the vaccine. So that's something that we'll continue to monitor and report back on as we go through. I think the other thing I just wanted to touch on was precious metals. Something that we haven't been discussing for a number of weeks because really there hasn't been anything to discuss. Pretty much sideways to slightly negative performance from the likes of gold and silver. But just looking at the market yesterday, we did see a stronger move for gold, silver, platinum, etc. Some of that coming through because of dollar weakness, as we've discussed the inverse correlation there. But also just where inflation expectations are, about around 2% in the US. and then the yield coming in a little bit in the 10-year, so closing the day at 1.08. That means that real yields, so taking account of inflation, are more negative than they have been over the past couple of weeks. And that maybe just has reignited some people's view on using gold at this point in time. So that's just something to note. We've also discussed, and a number of the subscribers have asked about, what does the yield curve steepening look like? So we're going to include a chart, and you can see there really the dynamics of the difference between the yield on the 10-year and the 2-year in the US. Going back to the middle of last year, we had a spread between those yields of some 40 basis points, so relatively flat. Today the spread is closer to 100 basis points, and as such the curve is a lot steeper at this point in time. So you can see that in the chart that's just on the screen at the moment. Just looking at the economic data yesterday, we had the US National Association of Home Builders Sentiment Survey. That came off a little bit. Something to monitor going forward, just given the trends that we've seen in unemployment and whether that's feeding a little bit into sentiment, or is it that the market is being very strong? It's taking a bit of a breather because there is just a lack of inventory. So two competing trends that we'll have to watch over the coming months. Just then, looking to the day ahead, we've heard from the Bank of Japan overnight, no change to policy there. They did revise up their outlook for GDP for 2021 from 3.6 to 3.9%. That just speaks a little bit to that ongoing recovery that we've been mentioning in Japan, but also how global trade activities improved, of which Japan is very much linked into that. With the ECB today, maybe in contrast to what we've heard from the Bank of Japan, they might look to reduce their outlook for growth, just given the ongoing restrictions on activity that we see across large parts of the Eurozone and how they have, in the main, been extended in recent weeks. I'll leave it there. Please do subscribe on YouTube and join us again tomorrow. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.